Hi everyone, and welcome to Lecture 49, Overview of Balance Sheet. In this lecture, we will try to understand what a balance sheet is and what it is used for by finance professionals, especially by M&A analysts. So, a balance sheet is a financial statement showing three things about a company. Its assets, meaning what it owns, its liabilities, meaning what it owes, and its shareholder equity, meaning the money invested in the business by its owners at a single point in time. This is really important. Balance sheet shows all three things we have just mentioned at a single point in time. For instance, on 31st of December 2015, not on 30th of December 2015, nor 1st of January 2016, but exactly on 31st of December 2015. Why? Because the items in the balance sheet constantly change, almost on a daily basis. But what matters to us is to look at the balance sheet on the same specific dates every year so that we can compare the difference in company's financial position over time and be able to drive a financial analysis. Balance sheet is usually reported at the end of each quarter, so 4 times a year. Let's take a closer look at the structure of balance sheet as we can see here. So in summary, the balance sheet shows, as I said, the sources, liabilities, and the shareholders' equity on one side, and the uses, the assets, on the other. The assets here consist of two main parts: the current assets, the short-term assets of the firm, and the fixed assets or non-current assets, the long-term assets of the firm. Likewise, the liabilities are split into two categories as current liabilities, meaning short-term liabilities of the firm, and non-current liabilities, meaning the long-term liabilities of the firm. We will not break down shareholders' equity now as assets and liabilities, but we will go through each one of these main parts throughout this section in separate lectures. Now guys, I want you to take a look at this a little bit, try to think about it, and try to understand the dynamics of the balance sheet from this outlook. The assets, liabilities, shareholders' equity, what I own, and how I funded it. Either debt, meaning liabilities, I'm funding my business assets and operations with liabilities, and my own money, equity. So now I want you guys to download the Excel document I've attached to this lecture, and there you will find the balance sheet of the Irish low-cost carrier airline Ryanair. This one right here. So I'm going to switch back to my Excel statement, my Excel file. As you can see here, we are looking at the balance sheet of Ryanair for the financial years of 2014, 2015, and 2016. The date of the balance sheet is 31st of March, which is the end of the financial year for Ryanair. It may look weird if you haven't seen a company in the UK before, the financial statement of a company in the United Kingdom before. These companies are not obligated to show results in a January to December financial year basis there, but they can pick their own financial year period. So Ryanair in this case decided to pick a financial year from April to March. So their financial year ends in March every year. I want you to focus on the general layout, the structure of the balance sheet, because we will talk about, as I said, each of these main parts separately in the following lectures. There's a well-known magic of the balance sheet. Well, not surprisingly, the uses of a company, the assets I mean here, as you can see, the uses of a company has to be equal to sources. In other words, assets are always equal to liabilities plus the shareholders' equity. Because what you get has to be equal what you funded it with. So assets is what we own, what the business owns, and here we see the liabilities, how the assets are financed. So this knowledge is used for cross-check purposes to see whether the balance sheet of the company is prepared properly or not. If you don't get zero when you subtract the assets from the sum of liabilities and the shareholders' equity, then you have a problem. And in the case of Ryanair, fortunately we don't have that problem. As you can see here, I have my balance sheet check. Here I have written the formula. I am simply subtracting, as you can see, total assets, which is the sum of current assets and non-current assets, long-term, short-term assets and long-term assets. Subtracting it from the liabilities, the shareholders and the shareholders' equity. And I get zero in each of these years, 2015 and finally 2016, which tells me that in this 3 years, Ryanair's assets were equal to the sum of its liabilities and shareholders' equity. So everything in the case of Ryanair's balance sheet looks fine. Hope you guys now have a better understanding of the general structure of a balance sheet. If you don't, please do not worry. As I mentioned, we will have a whole section ahead of us for this topic, and we will continue to cover the balance sheet by going through each main item in separate lectures. So just take a look, play around this if you want a little bit. As you can see here, I have item descriptions. If you need them, you can read them, but we'll be covering them in the following lectures. We have the current assets, the current liabilities, the current assets, the non-current assets, long-term assets, some of them, the total assets. Here, the liabilities, current and non-current, the short-term and long-term liabilities, and the shareholders' equity. And I have the sum, and here I have the cross-check. All right, guys, let's move to lecture 50 and start start taking a look at each of these items and with the current assets. Yes, we are going to cover current assets in the next lecture. So I see you guys in lecture 50, current assets.